Ripple and XRP continue expanding globally, and this time, the focus is on Africa. Ripple has just announced a new partnership in South Africa that could significantly strengthen the region's financial infrastructure and broaden XRP's presence across the continent. But this news arrives amid growing turbulence in the crypto markets, with fresh Bitcoin shorts, massive institutional sales, and geopolitical uncertainty shaking investor confidence. Let's start with Ripple. The company has officially entered into a partnership with Absa South Africa, one of the country's largest financial institutions, to provide digital custody solutions. This marks a key step for Ripple's presence in Africa, complementing its earlier integration of Ripple Dollar, the stablecoin issued on the XRP ledger, into several African payment corridors. Ripple now has custody operations positioned across major global regions, Medeco in Europe, Standard Custody in the United States, and Absa handling parts of the African market. It's becoming clear that Ripple's strategy goes beyond payments, it's building a foundation for full-scale digital banking. Ripple Dollar is already active in multiple corridors, and it's expected that by 2026 we could see the rollout of additional stablecoins on the XRP ledger, including Ripple Euro and Ripple Yen. These assets will play a key role in unlocking liquidity for global transactions, with XRP serving as the bridge currency connecting them all. But while Ripple continues to grow, the broader market is once again showing signs of stress. BlackRock has just transferred $153 million worth of Bitcoin to Coinbase Prime, a move widely interpreted as a sale. This comes as the asset manager has simultaneously been increasing exposure to tokenization projects on Ethereum, suggesting a strategic reshuffling rather than a simple exit. BlackRock's actions often precede larger market shifts, so many traders are watching closely. At the same time, a massive new short position has appeared in the Bitcoin futures market. According to on-chain data, a whale has opened a short worth approximately $140 million, separate from the large position identified earlier this week. The position is already in profit, and analysts warn that the coordinated opening of multiple shorts by large entities could indicate that further downside is expected. Bitcoin currently trades around $11,500, while Ethereum sits near $4,075 and XRP struggles around $2.48. Despite positive signals from global equity futures, especially in the Nasdaq, the crypto market remains subdued. Traders are cautious, waiting for clarity from both the U.S. Federal Reserve and the upcoming meeting between U.S. President Donald Trump and Chinese President Xi Jinping on October 31st. Until that summit, volatility is expected to remain high, as both nations continue to use trade threats and political statements to influence global markets. Analysts see a silver lining. For long-term holders, these price drops represent opportunities to accumulate assets at discounted levels. As one commentator put it, volatility is painful for traders, but it's a gift for investors who understand what they hold. Retail traders may be suffering from liquidations and uncertainty, but large institutions are quietly positioning themselves for what's next. Meanwhile, the conversation about market cycles is shifting. Historically, analysts have relied on Bitcoin having patterns to predict bull markets. But this time may be different. The structure of the crypto market has changed dramatically. Institutional involvement, tokenization, and utility-driven projects are altering the rules. Many now argue that Bitcoin's past cycles no longer apply, and that a new phase is emerging where projects offering real-world value take center stage. This transition could mark the beginning of a new type of bull market, one not led by speculation, but by adoption. Projects like XRP, XLM, XDC, and Hedera are positioning themselves as the backbone of tokenized finance, while Ethereum continues to dominate the tokenization space through its Layer 2 ecosystems. BlackRock, for instance, uses Ethereum-based networks for several of its tokenization initiatives. In contrast, memecoins and purely speculative tokens are losing relevance. Stricter regulations and the growing demand for compliance-ready digital assets are expected to drain liquidity from non-utility projects, redirecting capital toward those solving real-world problems. The market is evolving from hype to function, and Ripple, with its established infrastructure, appears well placed for that shift. So, while short-term uncertainty continues, the long-term direction is becoming clearer. The crypto landscape is being rebuilt around utility, liquidity, and interoperability, exactly where Ripple and XRP thrive. As we move closer to November, the industry will be watching both geopolitical developments and on-chain activity for signs of the next big move. Whether that means another correction or the start of a recovery remains to be seen, but one thing is certain: the old patterns are breaking, and the next phase of crypto will look very different from the last.